The catalyst for the sell-off today was the Fed. And you had kind of like a 1-2 punch to the gold and silver market from the Fed, because first you got some statements that were made by a Fed official. And I forget, again, the traders who are selling gold and silver still don't understand why the prices are rising in the first place. It doesn't matter when the Fed cuts rates. It doesn't even matter if they do cut rates. They never have to cut rates. The Fed could relieve rates right where they are, and gold and silver prices should skyrocket. Why is that? Because they're too low. The Fed aborted the hiking campaign too soon. And so it doesn't matter if they cut rates. Sure, if they cut rates, maybe gold and silver will go up a little quicker, but they're going to go up no matter what. Because the one thing we know is that the Fed is not going to raise rates.
Good evening and welcome to Economic News, your reliable source for financial insights. Today, we're focusing on Peter Schiff's latest warning about the future of gold and silver markets, following recent dramatic price movements triggered by the Federal Reserve. The Fed's recent statements have caused significant ripples in the precious metals market. Gold recently hit a record high of $2,400 per ounce, but has since pulled back to $2,377. Similarly, silver reached an 11-year high of $32.60 per ounce before dropping to $30.72. Despite these corrections, Schiff argues that both metals are still undervalued and poised for long-term growth. The sell-off in gold and silver was largely triggered by two key developments from the Federal Reserve.
Should buy more silver than gold because gold kept going up and silver wasn't. And I guess that the reason for that was that central banks were the primary buyers of gold and that they weren't buying silver. And since the general public has been selling, in fact, we've had 11 consecutive monthly outflows out of gold ETFs, indicating that investors in the US, also in Europe, have been selling, even though the price has been rising. So somebody must be buying enough gold to offset all this retail investor selling. And a lot of that is central banks. And they don't buy silver. They don't have room for silver. They're buying gold. And so I thought that silver was kind of getting left out, but that eventually, like a coiled spring, it would explode. And I kept saying, buy silver, buy silver. It's got to go up. There's no way gold's going to keep rising and it's going to leave silver behind. In fact, I know that in a real bull market, which I believe we're in, silver could lead gold. And so it's been lagging. And so I wanted my audience to buy it before it jumped ahead. Well, now it had that breakout. And so I did that special video on Thursday to alert people to this breakout, to get them to go and buy some silver on that breakout. We've had a nice 2-day correction in price following that breakout and move to new highs. Most of the decline was today, although we had some of the decline yesterday. So I mentioned that silver got all the way up to $32.50, which is still low. It's not like that's a high price. It's just the highest it's been since 2013. But as I'm recording this podcast on Wednesday night, silver is back down at $30.73. So that's a pretty substantial pullback, about $1.80 or so from the $32.50 that it traded on Monday. And if 30 is now the support, which I think it is, now that doesn't mean silver can't go below 30, but I think 30 is to silver what 2000 was to gold. Once we broke above 2000 became support. And yes, every once in a while we dip below 2000, but we never stayed below it for long, and it quickly came back. So I don't know if silver is going to go back below 30. It might go below 30, but I don't think it'll stay below 30 for very long. And at $30.67, that's close enough to 30 not to worry about it. I would buy it. On gold is now about $70 off the high of $24.50. It's at $23.77. I think the support in gold is moving higher. So it was 2,200. Now it's probably 2,300, maybe even a little better. So I don't think you're going to get much bigger pullbacks than what we've just seen in the last couple of days. But I wanted to reiterate that this is an opportunity to buy both metals, but in particular, silver. And the catalyst for the sell-off today was the Fed. And you had kind of like a 1-2 punch to the gold and silver market from the Fed, because first you got some statements that were made by a Fed official, and I forget who it was. I mean, I guess it's immaterial, because you could just switch them around because they don't really say anything any different. But one of them was on CNBC, and he had an interview. And then later on in the day, we got the minutes, the FOMC minutes that were released. So that was the.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
First, a Fed official stated that rate cuts might be delayed until later in 2024, with only one cut likely next year. Second, the release of the FOMC minutes reinforced concerns about delayed monetary easing. These announcements led to an immediate decline in the prices of gold and silver. Schiff, however, dismisses these short-term fluctuations, asserting that the fundamentals for a sustained rally remain intact. He points out that the expansion of the money supply will continue to erode the dollar's value, driving up the appeal of precious metals as a hedge against inflation. In his analysis, Schiff emphasizes the unique opportunity silver presents. While central banks have been stockpiling gold, they have largely ignored silver, leaving it undervalued. Schiff likens silver to a coiled spring ready to explode, and he encourages investors to take advantage of its current price levels.
None of these government numbers, whether it's the CPI or the PCE or the GDP deflator, none of these numbers tell the real story about how much prices are actually going up. And so none of them mean anything. And they certainly don't mean that we have a growing economy. Yes, we have an increase in the GDP. A lot of stuff can increase the GDP. That doesn't necessarily mean the economy improved. You have a big hurricane, does a lot of damage. You got to spend a lot of money fixing what broke. All that goes into the GDP, but we would have been better off without the hurricane and without all that broken stuff that we had to fix. Leisure counts as zero in the GDP. What is something that Americans desire most? And that's free time. That's leisure. I mean, why do you think people long to retire? Why is retirement a goal? Because when you retire, you have more leisure. You don't have to work anymore. You can relax, right? So Americans value leisure, free time. But there's no value to the GDP of that, right? If I just lie around on the beach, that doesn't generate any GDP, right? The government would rather have me working where that goes into the GDP than have me relaxing when that doesn't go into the GDP. But my overall well-being, my overall standard of living may be higher. I may enjoy my life more if I could relax more, if I had more leisure. But that doesn't really accurately get reflected in the GDP. But the point I wanted to make when I initially started this conversation was the Fed was putting in those minutes that maybe, because they say the economy is really good, and they were worried about, we might get inflation. Maybe we won't, right? They're saying maybe we don't have to worry, even though we have this great economy. We don't have to worry about this great economy causing inflation because of the productivity enhancements that are going to diminish that inflation. But those productivity enhancements don't diminish the inflation. They just diminish the price increases. The inflation is the expansion of the money supply. And the government's going to keep expanding the money supply because they got no choice. So they're going to keep on creating inflation. And that means they're going to keep on robbing from the public any benefits that might otherwise have come their way through increases in productivity. And that is the economic reality. That's why this gold and silver rally is just getting started. And you want to buy any opportunity, any pullback. And again, I think they're going to be short and shallow because the real money, the big movement into gold and silver is underway. Gold didn't make an all-time record high for no reason, right? This is not an insignificant event that you want to dismiss. Neither is the breakout. Neither is that move to almost 2,500 on the price of gold without any fanfare. Nobody's talking about it. No one's paying attention to it. What are they paying attention to? Oh, now Ethereum is going to get an ETF. Yeah, that's the big news, right? That's obscuring what's going on in precious metals. Silver hitting the highest price since 2013 is a significant monetary event.
He notes that silver has the potential to outperform gold in a true bull market, particularly given its increasing industrial demand in sectors like renewable energy and electric vehicles. Peter Schiff also critiques traditional economic metrics like CPI and GDP, claiming they fail to reflect the true state of the economy. He argues that inflation, driven by monetary expansion, continues to offset productivity gains, leaving average Americans with stagnant purchasing power. This, according to Schiff, makes gold and silver critical investments for preserving wealth. Looking ahead to 2024, analysts predict a turnaround for precious metals in the second half of the year. This aligns with potential Federal Reserve rate cuts and ongoing inflationary pressures, which historically boost demand for gold and silver. Schiff's message to investors is clear: don't be distracted by short-term market volatility. The recent price corrections in gold and silver represent a buying opportunity. He believes the rally in precious metals is just getting started, and their true value will soon become apparent. That's all for today's economic update. Stay tuned for more insights and analysis on the financial markets, and remember to stay informed and prepared as the economic landscape evolves. Thank you for watching, and we'll see you next time.